Greetings, traders out there in Traderland. My name is Des here at Grok. Trade on Thursday, February 9th, 2012. Here we are. Dow up just a smidgen. We have the S&P up 0.15%. We have the NASDAQ up 0.4%. But small caps dropped 0.4%. Banks off all day long, down 0.7%. VIX up 2.5%. Gold down 0.3%. Silver down 0.4%. Crude oil up 0.8%. And the dollar up just a wee bit. Taking a look at the S&P daily, I drew two lines. We have a rising wedge, bearish divergence here on the MACD. Centered oscillator, we're at a resistance point. We do keep running higher, making these new highs. Here's the Dow, looks much like it. Still pinched between these two trend lines, still making these new highs. We just keep churning northbound. And when it comes to the NASDAQ, making new highs, we just keep going higher and higher and higher. The thing to pay attention to here is look at this blue line. This is a 20 rising 20-day moving average. And markets have a hard time staying away from it. It'll pull away from the blue line or the 20-day, pull away, it wants to draw back down to it. Pulls away, wants to draw back down to it. Pulls away, wants to draw back down to it. The 20-day moving average can act as an area of a gravity spot, if you will. It goes way. Look how we extend away from the 20-day and it pulls back. We try to extend away, it pulls back and then drops. Same thing coming down. You draw down, you pull back. You draw down, you pull back. That line is a gravity spot. Well, the thing is we have been pulling away from this 20-day moving average for some time now. The markets are poised for a significant drop. It's going to need to relax and come back and find its, catch its breath again. If I look here at the Russells is a little different. We have a high base, which is more bullish than bearish. We can get a breakout here. But on the flip side, or the other side of the coin, the problem with small caps right now is it's relatively weak compared to the others. The other markets are going higher when we are staying flat here. Again, small caps or the Russells was in negative territory when the rest of the major indices were in positive territory. And taking a look here at the banks, banks flat but really dropping here. We're at this crucial area. I've been saying that we need to stay above the 1749 area. We're at 1748.8. I mean, we just cannot go any lower. If so, look for this gap to fill very fast and then some. And if the banks drop, the market should follow. As far as gold is concerned, we're just choppy under a little bit of stress, but we're finding support at the 11 EMA. That's the 11 exponential moving average. So watch that one as far as gold is concerned. And Apple made a ginormous run today. Boom, 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 boom. Look at the bodies here. Look how the body gets really large, and it happened on large volume. This is called a parabolic move. You can see it extending away from the 20-day moving average. Anytime you get a parabolic move with large volume, things that go up fast tend to drop fast. So all you Apple people out there, if you are long Apple, you are happy as a lark. So what I would say here is be very careful. Get your stop losses put in place because profit takers will want to come into this, especially knocking at the door at the 500 mark. So there's your warning. Share this video with a friend. And, hey, a couple other things here. Oil is at 99.73. Gold is at 1730 and some change. So the markets, we did get our Greece deal, but where was the big rally today? We just didn't see it. We got a little bit of pop, but nothing of any significance. And I think it has a lot to do with Europe just being, Europe has to get this. Greece is broke. And there's newer and harsher austerity measures taking place here. There's more bailout money, but the fact remains Greece is broke and cannot repay its debts. And I think we're going to have to wait. They're going to have to pay the piper on this one. Feel free to share the video with a friend. Take care and safe trading to you.